Good afternoon, everyone. This is Greg Schenk with the Schenk Company, and this is part of our podcast series, educating the public on what's going on in the commercial real estate business. Today, we have a special guest, Mario Datillo. Mario and I have known each other for several years. He's out of Naples, Florida, and for those of you that don't know me, I'm out of Columbus, Ohio. Mario is an expert in three different niches in self-storage, mobile home, and RV park, and we're going to talk about each one of them, the good, the bad, and the ugly, how we got into them, how's it going now, and is there an opportunity for you? So Mario, welcome to the podcast. Please give us a brief overview of your background, and then we'll get right into it.
Cool. Yeah, thanks for doing this, Greg. Appreciate the invite. Obviously, we've known each other for a while, and it's always fun to do different things with you. So again, thanks. Yeah, I got started in the mobile home park space, commercial real estate space specifically, back in 2013. But before that, I had a house flipping business, excuse me, from 2008 until 2013. It was good business. Made a lot of money flipping houses, but it was a job, and that was not fun. After a while, especially as the distress market dried up and we had mostly, mom and pops to buy from. Again, we couldn't buy all the bank, debt or foreclosures that we could before. So started looking at apartments actually to start and struggled. I was just talking to brokers, trying to find something. And for over a year, just couldn't find a good deal that I wanted to buy. And a buddy of mine brought me a mobile home park on a deal, and it was a deal in Naples, Florida, where I live. So it was like my backyard. Otherwise, I probably wouldn't have considered it. It's actually a non-performing loan on a mobile home park. He goes, "Hey, I know you're looking for apartments, but this is kind of like an apartment. It's a mobile home park." And I just kind of blew him off. I didn't take it too seriously. I was like, I don't want to own a trailer park, And after I started looking at it, I'm like, man, this kind of reminds me of apartments, but there's a lot of upside on this deal. Now, part of it was the deal, but also the operations of mobile home parks and things like that just, for whatever reason, stood out to me as a good opportunity. So we ended up buying that deal, did very well on it. But shortly after that, bought my second mobile home park and just kind of went crazy on mobile home parks. And, it's been a really good property type for me. Along the way, I've picked up self-storage. I've owned self-storage almost as long as mobile home parks. And in the last 2 years, started buying some hybrid RV parks, which hybrid just means it's mobile home and RV combined. And it's done well. We also own, some RV that's just straight RV as well. So those are the three property types that we've focused on. We also do own some small bay light industrial property as well. But we're always looking for kind of an edge, a niche, something that's not mainstream, super competitive. We're always looking for things like consolidation, looking for a specific seller profile, and good upside. We want to be able to buy things off market and be able to create a lot of value in them. So that's kind of what we've been doing for the last 12, 13 years now.
Awesome. So for those that don't know, explain off market compared to a listed property to them.
I don't know if you want me to do that, Greg, because you're a broker. I'm kidding. I'm a broker too. But so really what it means is that we're just creating a relationship directly with the owner of the property. And we're doing essentially what a broker would do, but we're not going to market it and find a buyer. We are the buyer. So it's a lot of direct marketing, like cold calling, emailing. We do mailers, all kinds of different marketing strategies to build these relationships, or at least initiate the relationship with the owner, and then manage that relationship until they're ready to sell. And a lot of times these transactions take years. Like the deal that you and I were talking about before we got online, Greg, that was a 3-year relationship. It took to manage that, to first talk to the owner. They weren't ready to sell. Then they decided they were going to sell to a couple other people other than us who are willing to pay more. And ultimately those deals fell through, and it's just follow up, and building the relationship to where we ultimately got a really sweet deal done on that. So that's really what the off-market direct owner relationship and marketing looks like.
Well, that's wonderful. I've always preached a relationship approach to the business. A lot of people maybe don't agree with that, but you've just hit the nail on the head that it's obviously worked for you. And the other big thing to be successful in anything is being persistent in life. The biggest deal I ever did took me 5 years to get in the door. So here you're talking almost 3 years. on this one in particular. So obviously that's got to be very satisfying to you, especially now, as you said, that it's doing so well after a short time after acquiring it. Is happy for everyone as far as that goes. So do you have a team of people that do this for you? Or are you doing it all
Yeah.
yourself?
Yeah, no, thankfully I've got a really good team of people. I started out, my dad and I were partners. My dad handled all the construction and I handled all the acquisition and capital raising and things like that and operations. But over time, you keep accumulating and takes more people. And honestly, I'm not a operations person. I'm not a property management expert. And so I had to hire really good people that had a lot more experience than I did doing it. And that's kind of how I've always done it. I, I haven't been out collecting rent myself. I haven't done the evictions myself. I've always had just good, solid people on my team to handle that. And it's worked well. Yeah.
Well, that's a huge point. When I'm speaking and teaching, I always tell people to get the best property manager that can, to never self-manage. I've had a lot of horror stories with people that I've helped buy properties that they've really tried to self-manage and it's really been a disaster. I'm with you. I couldn't manage a property if my life depended on it, and it would probably go right down the tube. So I'm glad to hear that. Now, do you use a local property manager in each market, or do you have like national ones that you're working with that work all over the country?
So to clarify, we actually own a management company. So we own the property management company that manages about half of our portfolio. And I've just never managed the management company. I've always hired someone to run that business. So although it's an in-house owned business, like I own the company, I personally have not done the collections and the evictions and things like that. So we do self-manage some of ours through our property management company we own, and then some of the properties are owned through our JV partners and are managed through our JV partners. They have a property management company that they run those properties, and we do have some third-party managed self-storage. I don't manage any self-storage. The only thing I manage is mobile homes and a little bit of RV. But generally speaking, it's a JV partner or a third-party manager that manages. And the third-party manager that we use for the self-storage is a national operator. They're top 10 operator in
Got
the
it.
country.
Which is obviously very, very important. To educate our audience again, tell what states that you're invested in and what states you want to be invested in.
I want to be in every state, but I'm in, well, most. I would say I'm in Florida, Georgia, Minnesota, Pennsylvania, Texas, North Dakota right now, so 6 states. But we've got offers in Ohio going on right now. I'm trying to think what other states we have offers out on. South Carolina, we've got an offer out on a deal. So like we'll buy throughout most of the country. We'd like to buy in more in the states that we're already in. We'll avoid, the communist states like California, Washington, Oregon. We're going to obviously avoid Illinois, New York, New Jersey, but generally speaking, we'll look in most states.
Got it. Well, being in Ohio most of my life, I got to say I'm very pro Ohio. It's growing like crazy and it's done
Yeah.
very well for me in my business. So I would definitely applaud that. All right, let's get into some more of the nitty gritty for all three. So let's start with self storage. Tell us the good, the bad, and the question marks.
Yeah, the good is what everybody talks about, and that's the fact that, I would say they're easy for evictions. If somebody doesn't pay, you still have to go through an eviction process and an auction, but it's a concrete, or metal room. There's nothing really to it. So it's pretty easy to trash out. You also don't have people calling you at all hours of the day because their, toilets or whatever aren't working because they don't live in it. The negative is you are still dealing with a lot of consumer tenants. So that comes with drama and people do weird things in storage units. We caught a guy throwing raves at our property. Like literally, he had an overhead door,
That's a new one.
opened up the door, and they put a stage in there, big speakers, like they were selling drugs. Like it was an awesome party.
How come we didn't get invited to
I was pissed. I was pissed. I was really mad that I didn't get the VIP ticket. I mean, I own the darn building and you didn't even invite me. So the venue is pretty sweet too, in my opinion. But generally speaking, you're dealing with consumer tenants that bring drama and they do weird stuff in their units. We've caught people living in them. We've caught people throwing raves, all that stuff. But So the good thing is simple eviction process in most states is pretty straightforward. You don't have these drawn out evictions like you have on the residential apartments and mobile home parks where the judge feels bad for the tenant because they live there. You don't have that. That being said, another negative I would say is it is management intense. Everybody thinks that self-storage is just like renting garage doors and automatic income, right? And they also underestimate the amount of turnover that these units do have. You've got to be very good with SEO marketing and online marketing, and that's why I don't manage anything myself. Either my JV partners manage them, and they have a setup that's pretty good for marketing, or we use a third party management company that has an entire marketing department because it's competitive. It's really, in my opinion, self storage other than location is pretty much a commodity. I mean, there's nothing really special about it. You're leasing a space to put your stuff in. So it's going to be very price driven and SEO driven. And so if you can't compete with the big boys, especially if you're in any, you know, major market, it's going to be very difficult to perform. So that's what I would say. I don't want to manage something that I have to be constantly running ads for and all that. And it can get pretty expensive. So I like self-storage though, because it is very good when it comes to keeping up with inflation because they're 30-day leases and you can continue to keep up. You can do multiple raises in a year. And so it is a good hedge for inflation. Generally speaking, it's performed very well. As long as the market doesn't get overbuilt, great asset to own.
Got it. What kind of returns are you getting on some of the ones that you've got? Is there like a ballpark average? What are the occupancies like now overall in the industry?
Yeah, self-storage has dipped a little bit generally in occupancy nationwide in the last couple of years. It's mostly because you've had a lot of new construction, a lot of developers just building stuff that they shouldn't be building. Um, they're just overbuilding. So yeah, we have seen a little bit of a dip in occupancy and rent rates, but overall, I think we're at like in mid 80s across the board, which is healthy. I mean, it's not a major that's pretty normal for self-storage. Between 85 and 95 is where you want to be. 93, anything over 93, you're probably underpriced on rent. And you're constantly adjusting the rents based on what units you have more or less of. And yeah, it's good from a return standpoint. I mean, some of them we don't have any capital in anymore, so they're infinite return, I guess you could say. Haven't We sold one self-storage facility, but it's because it got wiped out in a hurricane. We did very well on it, but it was a 1 year of dealing with insurance negotiations and all that. So it really doesn't count. Um, to tell you what our returns are in each deal, I don't have off the top of my head, but we're targeting deals that our investors can earn at least a 15% IRR over a 10-year hold, which isn't easy. I mean, 10-year hold is a pretty long time. But so yeah, we're for self-storage, we've really just looked for kind of off-market, distressed or underperforming buildings. We haven't done a lot of marketing for it. They've just kind of fallen in our lap when we're looking at other things, or a lot of mobile home park owners own self-storage, so leads come from that. Um, and it's just whenever we can find a really good deal off market that, there's some real motivation. I would say most self-storage, especially on market, is just way overpriced. I mean,
Got it. Speaking of that, how many of them are you having owner financing done, and how hard is it to get financing on self-storage
yeah,
facilities?
self-storage, there's very attractive financing, both, your local banks, your regional, your CMBS, life companies, no agency, of course, but and then SBA. We've never done an SBA loan, but they do SBA loans on self-storage. Um, we have done seller financing on probably half of the storage we've bought because again, more motivated sellers and yeah, the first storage building I bought, 55,000 square foot building in Naples, believe it or not, and it was seller financed. He financed, call it 80% of the deal on 5% interest, 10-year loan, 30-year AM. Just a really sweet deal. And we ended up refinancing him in year 7 or so. Returned all investor capital and Yeah, actually, I think we still might have like 80,000 into it or something like that. But either way, and it cash flow is very, very strong. We've refinanced it into a life company, non-recourse loan, and it's just a really strong property.
So for self-storage, what are your typical hold periods?
Everything that we're buying for 10 or more years.
So
Yeah,
you're
we're
long,
we're
long.
we're long-term cash flow. The goal is buy the asset, get it stabilized, refinance it, return investor capital, hold for the long haul for cash flow.
I mean, that sounds awesome. So on a side note, I got to tell you a really interesting story. My first deal ever when I got in this business in 1986, the client was a self-storage operator and he was phenomenally successful. And what he did was he would buy odd shaped parcels that weren't good for anything else that he got for a song. And he would build these things and he built them all up and sold them all to public storage and made a fortune. The reason he got into business was he collected fintail Cadillacs and had about 90 of them, and he needed a place to put them. So he was already a successful entrepreneur. And this is really funny. His business card had a fintail Cadillac with a picture of a girl's leg sticking out of it upside down in his red fintail Cadillac. And I'll just never remember that vision in my head. So one of them, he kept one self-storage and sold the rest. One of them, he put a car lot for what do you call it when you just let it sit there?
Like salvage?
Yeah, well, no. When you're putting them there and then they just sell, they sell. I'm forgetting the term.
Yeah, I know what you're talking about.
Anyway, he kept one, and that one turned out to be very successful. So he kept it. So just a little side note there. All right, let's transition into mobile home parks. Tell us a little bit why you got into mobile home parks. What's that market like, and what can we expect?
Yeah, mobile home parks are my baby. That's what I've been buying the most of for the longest, and I'll continue to buy them. I see mobile home parks as the strongest opportunity out of all of the asset classes that we own. I like mobile home parks because they have a moat around them. You really can't develop new ones in most markets because zoning won't allow it. Um, you have this really unique scenario going on. You've got increasing demand, more affordable housing is in need, where supply is decreasing because they're actually being redeveloped into other uses and you can't build new ones. So you shrinking supply, increasing demand. Every single one of them you own is just more and more valuable by the day because of that. And then you've got this other kind of storm happening, which is good. It's consolidation. You've got, and it's the same thing that storage went through, right? Storage went through consolidation. You had all these mom and pops that built storage for the exact reason you just said. They'd either use it for their own uses or they had a corner parcel and they wanted to do some sort of, covered land play where it would generate income while they held on to the land versus just sitting vacant. And then all these mom and pops, both in mobile home parks and storage, mobile home parks, they built these parks with their bare hands, and now they're dying and retiring. They built them mostly between the 1950s and the early 1990s, and their kids don't want them, whatever. So there's just this motivation and this wave of owners that really treated these businesses or these properties as lifestyle businesses. They need to sell, they're motivated, and they haven't been focusing on NOI. They've just been focusing on the cash flow that they get, and they haven't been raising rents, and they got the sweet little deal with the tenants. They go silently, they say, I won't raise your rent, but don't expect me to do anything. And the tenant's like, oh, shoot, okay. So you see the properties just kind of declining quality, tenant base declines because who wants to live in a slum? And that's a great opportunity for us to go in, buy a property from a seller who's not really focused on maximizing value, but more solving their problem of retirement or, estate issues or whatever. And we're able to buy that property, force the value up pretty quickly because we can then professionalize the management, do all the things that a good, well-run property should be, and realize that upside on it. And then ultimately, there's institutional investors behind us and they're scouring the earth for portfolios of stabilized parks to buy. So it's kind of like this sandwich. We can buy from mom and pop here, push the value up and then ultimately someday sell out to the institutional investor who's willing to pay the high premium for a stabilized portfolio. And that is, we've probably got 7 to 10 years left, maybe less, of that real consolidation happening before you're really having to buy from professional operators. Same thing happened with storage. It's just much further on. I mean, storage is pretty consolidated. There are mom and pop owners, and there always will be, but it's not like it was, 8, 10 years ago when you had a lot of mom and pop sellers still selling those.
Gotcha. What about occupancy of those? I would think the demand to rent a place there would be off the charts.
We own the lot and the land and the infrastructure and the common area and the amenities, but for the most part, we don't own the homes. So our tenants own the homes and they pay us lot rent, kind of like a land lease only on a residential lot, if you want to look at it that way. And they don't move much. I mean, because they own their home, they're very sticky. They often have their families move in as well, and it's a very nice community. I mean, when you think about it, think of the neighborhood you grew up in. At least for me, I grew up in a neighborhood where people lived there for 10, 15 years. Their kids grew up and, but we all kept, the families kept in touch. They talked, all that kind of stuff. It's what you see in the mobile home parks more. It's much more of a community than a lot of the residential neighborhoods you see now. And there's a lot of events going on. They'll put together like events for the residents and things like that. And it's just a warm feeling. So it's very sticky. We have very low turnover. Um, think of it like this. It's kind of like a for-profit homeowners association and a builder developer hybrid. What I mean by that is we own the land, the infrastructure, common area, amenities. If they don't pay, then we can evict, right? And we can foreclose on the home. So there's kind of, and they have to maintain their homes. So we don't maintain their homes, they do, but we have that lot rent that comes in. So it's kind of like a homeowners association. At the same time, whenever we want to fill lots, we act kind of like a builder developer and we bring in homes, new homes, we set them up and then we sell them on site and the tenant then starts paying us lot rent. So it's kind of this weird rental sales model combined, but it's a great business. It's a really
Is there
great
an
business.
Is there actually an HOA for that?
Not in our communities, no. There are some communities that have an HOA, and the authority of that HOA varies, and it also depends on who owns the land. You will see an HOA when a mobile home park is like a co-op or yeah, I guess you'd call it a co-op, where the residents actually own the land too. That's where you'll see the HOAs prevalent.
Got it. And what's a typical unit? How many units are there in a typical park?
I mean, it can be anywhere from a 5 lot park to a, 1,500 lot community. Most of ours are between, call it 70 and 120. But yeah, it just ranges. We target 50 or more occupied lots just so we have enough scale to be able to, afford on-site staff and things like that.
Well, as huge a demand as there is for affordable housing, why is zoning so difficult to get if there's that demand?
It's a great question, Greg. And the funny thing is, ask a politician, and they'll tell you they would love a mobile home park for affordable housing, but then when it comes down to it, they won't allow it. So I think what you're asking is why won't they allow parks, right? That's what you're asking?
Yes.
Yeah, it's because a couple different reasons. Number one, who wants a mobile home park popping up across the street from their house? Most people don't because it's not attractive, right? We always hope that somebody's building a bigger, nicer, more expensive home across the street because it helps values, right? Where bringing in a bunch of trailers doesn't really help the community and the valuation in the area. I don't want a mobile home park going in across the street from my house either, right? Like, I mean, I'm realistic about that and I'm honest about that. But also, there's a taxation issue. If you think about it, they're able to tax the land value, all right? But those homes aren't worth much. So what would generate more tax revenue? Land or a big office building, right? It's a big difference. And keep in mind, they have to service all these residents that barely pay any home tax. So their kids go to the schools and they use all the services, but they only get $150 a year in property tax on that home. So there is a monetary reason too.
Got it. So that actually brings up another interesting question. Is it some people with families, or is it mostly older empty nesters, retiree type?
Yeah, you've got kind of two different models. They're all really, yeah, two different models. I mean, you've got the family communities, we call them, which is all ages. There's no age restrictions, and it's just hardworking blue collar folks mostly that just either can't or don't want to spend the money on, a more expensive home. And they're just looking for purely affordability. That's the majority of mobile home parks. And then you have what I'd call like lifestyle communities. Those are mostly 55 plus communities with amenities and all that. And it's an affordable lifestyle place to live. Like it's just like you would find in Florida, where you got these gated communities with the pools and the clubhouses and all of that. That's limited to certain markets. You're going to see that in, Florida, Arizona, California, but in some places of Texas, maybe. But generally speaking, most communities nationwide are going to be more family affordable housing.
Got it. So actually, I go to Palm Springs, California a lot, and I've driven by a couple out there that did have a pool in the clubhouse. So that kind of rang in my mind. It's been a while since I had gone through it, but as expensive as things are out there, there's an awful lot of people that really have no other choice.
Yeah, we have a retirement community, 55 plus community in Florida, and it's mostly snowbirds. I mean, it's pretty quiet in the summer. It's like their second home, and instead of having half a million or $1 million second home, they just have a manufactured home, and it's got a pool and nothing super extravagant. But look, you can be a mile from the beach for 600 a month in lot rent. Their home probably cost them 30 to $40,000. Like that's a really good deal for someone who just wants a second home for a few months a year. And that's you do see that in Florida a fair amount.
Interesting. I was going to ask you how much those cost now. Can they finance those, or is that something they just have to pay cash for?
Yeah, they could finance them. You see a fair amount of seller financing, but also there are banks that'll finance them. Um, but in that kind of a community, it's mostly cash buyers just because it's a second home for them and they got 50,000 to write a check for. Yeah.
Got it. All right. Well, let's transition into RV parks.
Okay.
Tell us about RV parks.
Yeah, so I forgot to mention the negative on mobile home parks. I think the main negative on mobile home parks is you do get into scuffles with government fair amount just because they don't want you there, and they'll target you. And then also, if you don't own the homes, it takes longer to get the residents to clean up their homes. And it's harder, like if you own an apartment building, you can just expire the lease when it's up, go in, remodel the unit, good to go, right? Or you can reskin the building, can redo the parking lot because you own the building and all the structures there. Or with mobile home parks, you don't. You own the land and all the things we talked about, but you have to kind of like push the resident to clean up their home to get that better appeal, curb appeal in the neighborhood, which then attracts the better residents. So it's a little slower process. And then there is a titling issue. When you get a home back through eviction, titles are a headache because you're dealing with the DMV to get a mobile home title. And we all know what it's like to deal with the DMV for anything. As for RVs, I'd say the positive about RVs is you can fill them up quickly. If you want to develop an RV park and have it occupied quickly, you can do that. Mobile home park would, if you could get the zoning to bring in all the homes, set them up, and then sell them, it's a slow process. Where with RVs, you can just start your marketing. They're pretty inexpensive to develop. You can put the slab down for your little patio. You can bring in the water, electric, and sewer, and boom, you got a RV lot and start advertising. People start pulling their own units in and you can get occupancy pretty fast. Additionally, they are good in certain markets. I like RV parks in Florida and Texas, and that's about it. I'm not saying that other markets aren't great, but those are just no-brainer markets where there's so much population growth and demand for RVing all year round that they're both very strong markets, but I wouldn't probably buy RV parks in other states. There's different business models for the RV parks. You've got several different business models. You've got the short-term overnight stays right off the freeway. You've got um, the long-term stay, which is what we have. We have, long-term stay and hybrid long-term stay, just because we don't want to be in the real transient business. You got to kind of look at RV parks and mobile, they look similar to mobile home parks, but they're very different. Think of a mobile home park as kind of an apartment building. It's housing, it's affordable housing, where the RV park is more hospitality. And even on the short term, I'm sorry, the long term RV parks, they can pull out anytime they want. And sometimes they do. They'll pull out that day randomly. And you're like, wait, where'd that person go? um, and that can be a problem. You can lose occupancy or gain occupancy very quickly. So that's a benefit and a risk. Um, Cap rate wise, they're typically a higher cap rate than a mobile home park because they are less stable. It is more of a business. They need to be staffed more, and they're they're great because you can raise rents quickly, just like, self-storage if you need to, and you can fluctuate the rates much more if you've been running as long-term and you want to bring in some short-termers just to get occupancy, you can do that. They're pretty flexible. And they're relatively inexpensive to develop and much easier to develop when it comes to zoning because cities like them because you're bringing in people who are there more for tourism, more there to spend money, where mobile home parks are more affordable housing, so they spend very little money. And they have a little bit better curb appeal, especially if you're requiring newer RVs only in those parks. So I like them. I think they're riskier and I'd be very selective in buying them. I tend to like the hybrid model where you've got the mobile homes and then there's 20% or 30% of the park is RVs because what you can do, and I like this model a lot, um, buy it as a hybrid and then slowly replace RVs with park models, which are basically small mobile homes, like tiny homes. And you can end up with 100% equivalent to a mobile home park, all very stable, sticky residents who own their homes, even on those RV sites. So I think there's great opportunity in RV park world. There is consolidation happening there. A lot of mom and pops own those campgrounds, and you know, they've owned them for a long time, and the kids don't want them. So there is a lot of mom and pop sellers, and there's not a lot of transparency, kind of like mobile home parks. People don't know what the rents are. Like
Mhm.
if you called John about his mobile home park, he has no clue what the neighbors are charging. Doesn't care. He hasn't raised rents. Like I said, he's kind of doing his own thing. And there's not one website like apartments.com where you can just look and see what all your competitors are charging.
Maybe that's a business opportunity
Well, that is the opportunity, right?
on there. Now, are they zoned different from a mobile home, or is it the same
Yes.
zoning usually? There is zone.
Yeah. Most markets it's different zoning. There are some that will allow you to go one direction or the other. If it's a mobile home, they'll let you replace it with RV or RV with mobile home or interchangeable. But generally speaking, it's a different use altogether.
Got it. What about you talked about bringing in the utilities? Does the cities ever help you with that, or is that always on your dime?
It's always been on our dime. We do own a park in Florida where the tenants pay directly. Like we have, I'm trying to think, we probably have more than one park that has that where the tenants actually pay the water and sewer bill directly to the utility company, but we own the lines. There is a rare scenario where the city actually or the utility company owns the lines, pretty rare. And where they would be responsible. You do see sometimes where the city will own the roads, which is great because then they have to maintain it. As long as they maintain it, it's great. If they don't, then it's a big problem because it's out of your control and that reflects poorly on your community. So, ideally, you'd like the municipality to cover the roads and the utility to company to cover the utilities, but it's rare. It's rare.
Got
Usually we own those.
it. Got it. Okay, so we've talked about really three different niches that you enjoy them all.
Mhm.
If you get approached by something, is there one more than another that right now, today in 2025, you're more attracted to?
Yeah, we own some light industrial as well, the small bay kind of stuff with the
Very hot submarket.
small businesses, that rent from us. If I was buying anything right now, I'm continuing to buy as many mobile home parks as I possibly can, and we're buying the light industrial stuff because there's not a lot of that being built, and a lot of mom and pop sellers, kind of the same scenario as the mobile home parks. But yeah, mobile home parks are going to be my jam for the next several years as long as I possibly can because it's kind of like buy as much as you can before you can't buy them anymore. I mean, you'll be able to buy them.
Makes
You'll just have to
that
buy them
makes
from
sense.
You'll have to buy them from professionals, and that's no fun.
Got it. So you'll have to make sure to get me the criteria for the small bay industrial, and I'll put it out to my network and see if I can find you somebody. I actually have a client that had a warehouse in Dallas he wanted to sell, and I put it on Twitter and found him a buyer in 1 hour. And
I bet.
we're supposed to close this month, so kind
If
of
it doesn't
exciting.
close, call me.
I will, because it's a
Yeah.
pretty good opportunity.
Yeah.
Okay, so we've gone over an awful lot of stuff, and there's a lot of investors out there. Some have done a little bit, some have done a lot. There's a lot of uncertainty going on in the market with everything going on out there today. How do you decide where do you put your money? You know, how much cash you hold? You put it in stocks, you put it into an investment property. How do you personally go about thinking that of what you're doing and your strategy?
So I'm definitely not a financial advisor, and I would not tell anyone to manage their money like I do. um, but I'm heavy in my properties, of course, just because if you think about it this way, I'm an investor, but I really run an investment business. I run a fund that raises capital to go out and acquire these assets, and I run multiple supporting businesses like a mobile home dealership, a real estate brokerage, an education company around investing in mobile home parks, teaching people how to invest in mobile home parks. Excuse me. So I'm really combination of, I'm more of an entrepreneur than an investor. I run an investment business, but most of my net worth is in the real estate that I own, of course. But yeah, I'm a little bit in public equities, a little bit in crypto, a little bit in, a few things, but not heavy. I'm heavy in real estate, so don't listen to me about how you should invest your own money. I would say that I will give some advice that I think might be helpful to the listeners. If you need to decide if you want to be an active investor or a passive investor. All right.
Great.
Because an active investor is really running a business too. And a lot of people get into real estate, but specifically mobile home parks. They'll come to me because they get into the coaching program and they want to learn how to buy them. And they're like, yeah, I want to go out and buy mobile home parks. And I'm like, great, cool. Tell me about your lifestyle. Well, I own a business and I have, I want to retire soon. I'm like, so why do you want to go and buy a mobile home park and run it? Like that's a whole nother business. Why don't you just invest passively with someone else who runs it as a business and has the scale and all that? So, and a lot of times people join the coaching and they'll be like, whoa, this is a lot more than I thought. Can I just invest with you? Or, things like that, because they realize that it is a business. No matter how boring a property is, um, you still have to do the asset management. Even if you're not doing the property management, there's that ownership responsibility that still comes in that you have to deal with. So I would just figure that out. I would figure out, do I want to go out and actively run properties? Even if you hire a management company, still a business. Or do you want to just passively invest with someone who does it all day, every day, has a team, all of that? Not pushing you one direction or another. You make more when you own and operate, because you don't have to split it up with anybody. But sometimes time and leverage of skills is important to pay attention to and take advantage of. And yes, you give up some ownership to and fees to the sponsor, your active general partner. It might be worth it instead of learning a whole new property type yourself.
Well, it's so funny you said that. So this can really apply to me. You know, I've had my brokerage, my own, for 29 years. When I first started investing almost 30 years ago, I tried to self-manage. I tried to be hands-on while I'm working 60 hours a week as a broker. And
Yeah.
one day I woke up and I realized three of my investments hadn't paid me for 3 months. And yeah, one headache after another, one headache after another. And again, I'm not a property manager. That day told me I should invest in partnership with somebody like you. And obviously, I always talk when I'm teaching about risk tolerance, what's going to let you
Yeah.
sleep at night, what's going to keep you awake, what's your exit strategy, how long do you want to hold it? Are you a fix and flip guy like you started, or a long-term hold, which we usually say is a minimum of 5 to 7 years? On
Yeah.
some, I've had one I've held for 15 years that we've invested in, did phenomenally with it. So I think asking yourself those questions, and I actually have a forum on my website that people can go to, but let people know, Mario, where's the best place to get you if they want your coaching, or how to get a hold of you to invest in one of these opportunities.
Yeah, I'd say it probably can help two different people. The first would be the guy who says, look, I'm running a business. I make crazy money. I'm doing well. You know, like yourself, you make great money doing what you're doing, but to go start a second business of owning real estate, it's a headache, right? Or it's a distraction from your lifestyle or your other business. So for people who are looking to passively own any of the four asset classes that I mentioned, equitygrowth.net is my website. And that's, you know, really the fund manager, all of that. And then for the person who says, hey, I really want to go buy a mobile home park and own it and do what you're doing, getrealcashflow.com is my education company. I can teach you how to do exactly what I'm doing. I partner with my clients, and my fund will put up the capital for the deals. Like, we've got a pretty cool ecosystem going on that can add a lot of value. But I would say, I'll give you a little story real quick and then we'll wrap up. It sounds like we're kind of coming to the end here, but I've got a friend of mine. He makes seven figures a year wholesaling land. Crazy, right? And he has no employees. Yeah, he works hard, but he does really well with no employees. And he's like, yeah, I think I'm going to start buying multifamily properties. I said, good. What's your strategy? What are you going to do? He goes, well, I'm going to start, studying up on it. I'm going to start marketing for him. And I'm like, why? It's like, well, because I want to own multifamily. I'm like, yeah, but you know how much your seven-figure a year wholesaling business is going to take a hit by you going and trying to learn a property type? Like, why don't you just keep stacking the cash? You're making a ton of money doing what you're doing. Just go invest it with somebody who's doing it all day, every day. And so I know I'm beating a dead horse. I'm really not like hunting for passive investors. I just want people to recognize that if you've got something that's producing a lot of income, don't stop doing it because it's
Well, it's
these are
hard to focus on two things. For me,
yes,
I'm very impatient. It's hard to focus on one thing. Most people are ADD, let's face it. And
yes,
if you're working hard, whatever you're doing, no matter how well you're doing, it's hard to divide that up. So it was without a doubt, it's been almost 25 years since I started doing it passively.
yes,
It's the best thing personally that I ever did. So
sure.
yeah, there's no right or wrong, good or bad. I mean, you have to generate what's your own risk tolerance and your own strategy. Mario, I can't thank you enough for spending your valuable time helping us and educating the public of what's going on out there. And I can't wait to do another deal with you in the future.
Let's
And
do it.
I hope you'll come back again sometime soon.
Thank you, man. I appreciate the invite, Greg. You got a great show going and look forward to doing more with you. Thanks.
All right, take care. Have a wonderful day. And everyone, have a wonderful week.